Hello investors, welcome to Simpli Stocks. Most companies have announced their September quarter results, and so far we have also covered many good businesses on our channel that have posted quite strong results. This will likely be the last or second to last video in our Q2 FY26 result series, where we will study three interesting small cap businesses from three very different sectors along with their results. We will understand their business models and we will look at their results and also try to understand what are their growth triggers. But yes, as a standard disclaimer, this video is absolutely not a buy or sell recommendation on any of these companies. You must keep that in mind. With that being said, let's begin. The first business we will discuss is from the gold lending sector. What has happened is that due to the increase in gold prices, the demand for gold loans is also increasing at a very fast rate. With the rise in gold rates, what happens is that customers can take a loan for more money for the same amount of gold. And here the bank or NBFC earns more interest income by giving a larger loan. Another benefit that gold lenders have got is that RBI has become quite strict on unsecured lending, meaning loans without collateral. In the last 1.5 years, loan defaults had increased in microfinance and unsecured lending. Therefore, several checks and standards have been introduced to keep the risk in the sector under control. In such a scenario, the demand for personal unsecured loans has decreased and the demand for gold-backed loans is increasing. People need money for one reason or another. Now, they won't get a loan without collateral, so the next option left is to pledge gold. For example, I saw that Muthoot Finance has actually increased its growth guidance to 30 to 35%. When a large cap company is growing at a rate of 30-35%, you should realize that there is a very strong tailwind in that sector, and the smaller companies in the sector will be growing even faster. In this context, the business we will study is CSB Bank. In this screenshot, you will see that a substantial 47% or almost half of CSB Bank's loan book consists of gold loans. The remaining 35 to 36% share is from the wholesale and business lending group, and 17% is from retail loans. In wholesale loans, they tend to give loans to large companies, and BLG loans are given to medium-sized businesses. Retail loans include car, education and home loans, etc. Here you will see that their gross advances have grown by good 29% compared to last year. Advances or loan book is the money that NBFC has given out on loan. And the biggest reason for this 29% advances growth is their gold loan portfolio, which has seen a very good growth of 37%. Here you will see their portfolio yield is 11.8%, meaning CSB lends money to its customers at an interest rate of 11.8%. CSB's gold loan portfolio yield may seem quite low to you compared to Capri Global, etc., which is at 20% or even higher rate. The reason for this is that even in gold loans, CSB mostly targets business customers. That's why although the yield is lower here, their customer base is slightly more secure than other gold lenders. The same growth has also come in their disbursements. Disbursements mean the amount of new loans given by a bank or NBFC. Their disbursements have grown by a formidable 50% compared to last year. And although it is not written here, you can notice how good the growth has been in gold loans alone over the past 1 year. Gold loan disbursements have increased from almost 5,750 CR to almost 10,000 CR, which translates to a very healthy growth of 74 to 75%. So overall, we can say that CSB Bank has been a very big beneficiary of the rally in gold prices. In our last video, we were seeing how Gadgil is coming out of Maharashtra to become a pan-India player. Similarly, CSB is also expanding pan-India. Until now, their main presence has been in South India, with Kerala and Tamil Nadu being their biggest markets. 79 to 80% of their branch network is in Kerala and Tamil Nadu, Andhra Pradesh, Maharashtra, Karnataka. But now they are moving out of South and expanding across the country. Let us look at their results now. Here you will see that their interest income has grown by 28% compared to the last year, but the interest expense and operating expenditure increased at a faster rate, which is why the growth has not been as high. Profit has grown only by 16% year on year. For future growth, CSB is currently spending a lot of money on its branch network expansion and tech development, which is putting a pressure on the bottom line. However, you have to make all these investments for growth. We will start seeing the results of this in a year or two. Top line growth is already strong here, but we will start seeing good net profit growth from FY28 onwards. The management of this bank is quite visionary and their target is to make CSB a mid-sized bank by 2030. Bank of Maharashtra and UCO Bank are two very good examples of mid-sized banks. CSB is a small cap bank. Its market cap is just 7,000 CR right now. And talking about the banking sector as a whole, in my understanding, CSB Bank and DCB Bank are currently the two fastest growing businesses in the entire sector. CSB's long-term outlook is strong and it has received a huge push in the short to medium term due to the growth in its gold loan portfolio. CSB's fundamentals are also strong and its valuation is also attractive. This business is currently trading at a PB ratio of 1.5. So if you are interested in banks, you can look into it independently. Kotak Bank and HDFC Bank are two very good examples in the banking sector which have created a lot of wealth for their shareholders in the long term. But one thing you have to keep in mind about CSB is that this business needs to improve its deposit mix. You will see that their current account deposits are only around 21% and bulk deposits are 46%. They have more money in the form of savings accounts and large deposits, due to which they have to pay more interest on their deposits. If CSB Bank has to achieve its growth target in the long term, they will have to improve both their CASA ratio and their term deposit mix. Now, a humble request, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel, Simply Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Let's come back to our discussion. The second business on our list is EFC India. EFC is in the office leasing business. They take buildings on lease, renovate them and then lease them further as offices to other companies. It is possible that EFC might lease the entire office to one company. Apart from this, they also run co-working spaces where staff from different companies work together in a large office. This is their rental business. They have 86 offices in 10 Indian cities like Delhi and Bangalore, where they manage more than 68,000 office seats. We can read more about their business here. Out of the 86 offices they operate, they own 18 of them. If they ever find a good property in a good location, where interest they pay on the bank loan is less than the rental yield, then they buy such properties. And they charge approximately 6,750 to 7,250 rupees per seat per month. EFC's average occupancy has remained above 90%. This means that approximately 90% of their offices are booked. This is the highest number in the industry. And in the rental or leasing business, the better your occupancy is, the better your margins will be. You see, your building's rent or expenses will remain the same. So the more clients you have, your margins will be better. Apart from this, EFC is also in the business of interior designing or offices. They design the offices and working areas of other company, which falls under the design and build segment. Here they currently have an order book of 145 crore. And then there is this third and last small furniture manufacturing segment. This fits well into both their office leasing and interior designing segment. They bought this furniture manufacturing business named Ek Design a while ago. One positive development that has happened in this furniture business is that EFC's promoters have purchased Pepperfry through their another company, TCC Concept. Pepperfry is in the business of selling furniture through its website and stores. You might have even seen Pepperfry stores. With this acquisition, what will happen is Ek Design will get a good platform to market its products across the country. Now, talking about their clients, you will see here that large companies like Godrej, Bajaj Finserv, Flipkart and Muthoot Finance are their customers. Let us look at the results now. You will see company sales have increased by 53% to 255 CR. In this, their office rental business has grown by 45% and the design and build segment has seen 44% growth. EFC is currently the fastest growing player in the office leasing business. Since the company is small in size, the growth is good. And their management is also very aggressive. So their cost control is better compared to other players. That is why the margins are also better in this business. They are continuously adding more seating capacity in their office rental business. The management does not give guidance, but their broad target is to add 20,000 seats every year or roughly 5,000 seats every quarter. Here you will see that last year they had a total of 50,425 office seats and they have added approx 17,800 more seats during this period, and there has been a 33% year-on-year growth in billed seats. Apart from this, you will notice that 44% of their sales come from interior designing business and 51% from the office rental business. But all quarters are not normal. Sales from the design and build segment can fluctuate quarter on quarter depending on when the order is delivered. However, their high margin business is the office leasing business. This brought in 63% of the profit. Ek design is currently a very small segment, so we should not go too deep into that. Furthermore, the company's EBITDA has increased by 40% and the profit before tax has seen 36% growth. We will compare PBT instead of PAT because their tax rate was high last year, so profit was lower last year. Hence, the net profit growth will seem high to you. But overall, these are very good numbers. EFC's Q3 results were poor last year. Since then, the stock has corrected significantly and had completely gone out of fashion. But if we put aside that specific quarter, EFC has performed quite well at the business level overall. There is a good tailwind in India's flexible office leasing market right now. The entire sector is currently growing at a 20% rate. GCCs or global capability centers are coming, meaning foreign companies are opening their offices in India. In addition, companies are also growing, new startups or businesses are emerging. So there is a good overall demand in the sector. The sector is growing so fast and this business is also showing 40-50% type of growth. But amidst all this, you will see that EFC is currently trading at a PE of just 18. So this is a very good valuation. One more positive development in this was that in the month of October, the famous ace investor Sunil Singhania also picked up a small stake in this business through his fund Abacus. You can study this business yourself independently then. Now, the third and final business we will study is Zaggle Prepaid Ocean Services. We have covered Zaggle multiple times in our Simpli Stocks community, but we will be covering it for the first time on our YouTube channel today. This is also a portfolio stock of Ashish Kacholia. In their shareholding pattern, that he has 2.24% shareholding in it. Zaggle might be a new business for many of you, so we will understand its business model in a little detail. To put it in very simple language, Zaggle provides a platform for companies to manage their expenses, meaning they provide them with apps, websites, or software services. They have several products such as Zaggle Save, Zaggle Propel, Zoyer, through which they provide services to corporates for different use cases. To understand with an example, you must be aware how a company or a business has to do so many expenses on a daily basis. Tea is coming in the office, staff is traveling to another city for business trip, so there might be flight and hotel expenses, internet expenses, vendor payments, and so on. Now see, if an employee makes a payment on behalf of the company, she or he claims reimbursement, and Zaggle provides a platform for that. In most companies, you must have seen that if you want to claim reimbursement, you have to give the bill to HR or its photo to HR. But through Zaggle, you just upload its photo to their platform, and their platform with the help of AI verifies your bill and reimburses your money. Now look, for all your large expenses such as paying a supplier or staff salaries, you will find countless platforms in the market. But Zaggle helps manage the small expenses which are low in amount but are voluminous in nature, meaning their quantity is high. What happens is that as a company grows bigger in size, these small expenses tend to become a major hassle. This spend management is a niche but fast growing segment in India. This is because you will see that small companies handle all these processes manually to save money. They will hire someone on a salary of 20-25,000 rupees to look after all these tiny expenses. But large companies want automation to improve efficiency. So they adopt these systems and processes. Because of this, it is currently a niche segment in India that is growing very rapidly. Moreover, if we look at the competition, their other competitors are focused on one or two specific use cases. Zaggle's advantage is that they have created an integrated platform for everyone from employees to dealers, distributors, and vendors. In addition to this, Zaggle provides co-branded and prepaid cards to corporations. What happens is that if an employee is traveling somewhere, they will book a flight ticket or a hotel, and sometimes they go over budget. In such a case, the company's HR will not come and fight with you, saying that your flight could have been booked at 6,000 rupees, but you booked for 8,000 rupees or 10,000 rupees. But the company also has to manage such expenses. For this, companies issue prepaid cards. So your limit will be set and you will only be able to spend within that limit. If you try to spend above that limit, either that transaction will be cancelled, or you will have to go to a higher department to get that expense approved. Apart from this, you must have seen that companies give gift vouchers for staff like Amazon, or Myntra vouchers for Holi Diwali, or incentives are given to dealers and distributors. Zaggle ties up with these platforms to provide these vouchers as well. So broadly, these are different services that Zaggle offers to companies, and you can look at it as a software-based spend management business. Their business is also showing very good growth right now. Here you will see that in Q2, sales have increased by 42.4% compared to the last year, and EBITDA has seen 48% growth. We will look at company's adjusted EBITDA instead of reported EBITDA, because last year the company issued ESOPs, which is why the growth in reported EBITDA will seem higher to you. Similarly, net profit has seen 79% growth, and net profit margin has increased from 6.1% to 7.7%. And this is what is special about tech businesses, that you are seeing sales grew by about 40%, but profit has doubled with an 80% type of growth. We have repeatedly explained this on our channel and in our Simpli Stocks community too, that one of the biggest advantages of a tech business is that the platform development cost is one time. Once you have built your platform, app or website, your expenses will not increase at the same speed as your sales. If sales growth comes in at 40%, your expenses will increase by a maximum of 10, 15 or 20%. In such a scenario, your profit growth can be even 60% or even more. So as a tech business gets bigger in size, this margin expansion will happen very quickly. You can see this margin expansion happening in businesses like Cartrade or Zinka Logistics right now. Furthermore, the valuations of most tech businesses have become quite reasonable recently. You may remember that a year or half ago, the IPOs of many tech companies came out. But at that time, valuations were very high and there was no clarity on margins. But since then, these businesses have corrected well. Investors have also got clarity on margins and they have moved from loss to profits. And the valuation has also become attractive. As of today, many good tech businesses are trading at very good valuations right now. Anyways, let us come back on Zaggle. Growth is very good in this business. Apart from this, they have also acquired many small startups, which although small right now, they will help to bring good growth in the future. Their management had initially estimated 40% sales growth for this year, which they now have increased to 45%. And along with this, they are targeting an EBITDA margin of 10 to 11%. A 10 to 11% EBITDA margin translates to a net profit margin of approximately 8%. Please remember this, as these figures will be useful when we do Zaggle's valuation. Because you see, Zaggle's PE ratio may seem high to you right now. Screener will show you a PE of 45. But because of such good growth in the business, we will value Zaggle on a forward basis. Let us quickly do Zaggle's valuation based on management's guidance now. So last year, their sales were 1300 CR approx, on which the management has indicated a 45% growth. In this case, their sales this year can be around 1900 crore. If we take estimate of 10 to 11% EBITDA margin and 8% net profit margin on this, Zaggle will achieve a net profit of around 150 CR this year. And this 150 CR profit for the whole year seems quite achievable to me, because you see, the company has already earned a net profit of 60 CR in the first 6 months of the year. Their H2 is better than H1. Even if we take a conservative approach, a 150 crore profit is achievable. The company's current market cap is 5,000 crore. So although Screener might show you a PE of 45, on forward basis, Zaggle's PE comes out to just 32, 33, which is a very good valuation for a tech business that is showing such good growth. Moreover, the management has also talked about EBITDA margin expansion in the long term. The management has said that this 10 to 11% EBITDA margin right now, they will take it up to 14-15% in the next 4 to 5 years. This means that the sales growth that comes into the business will happen. But along with that, we will also see very good growth in the bottom line as well due to this margin expansion. And when I was reading their con call transcript, another interesting thing I found was that company recently issued warrants to Times Group at 567 rupees per share. Promoters have also participated in this fundraising. The warrants price is 50% higher than Zaggle's current price. So this is also a very strong signal that tells us how undervalued Zaggle is currently trading at. Now, if you did not like this video earlier, my humble request, please do give me a thumbs up now. Your likes are our motivation to continue bringing such high quality research like this for free. Also, to ensure you don't miss our future videos, you can also subscribe to our channel Simpli Stocks. I will see you in the next video. Happy investing.